So the only reason I had a bullish bias going into today, and we can talk about yesterday as well, is just because of ES mainly. So we'll hop into here. And if you're taking a look at ES going into the day, and if you guys know, I like to use 0.5 of the previous candle, you can see we respect that, we hold that, and what are we lacking? We're lacking a upper wick. So that is just what catches my eye the most. And then as we go into the next day, or into today, we once again reach back into the EQ of the previous range. In this case, because we have a large wick closing here, I want to see the upper half of the wick be supported. So once that's supported, then you can look to get on side with the move higher, which wasn't super clean, but 10 a.m. did provide that continuation. So any questions regarding ES or just that bias of we have a massive gap down almost 2 weeks in a row, and then we are just trading it back into the range? Any questions there? Was the 1 hour 5-minute entry valid at 10:30? So are you talking about ES or NQ? Because I see it on both. I personally think ES, but I want to see what you were looking for. Do you mean NQ or ES? I'm not sure which one you mean. So we'll just go here and we'll go to the 5-minute and I'll show you. So it is valid, right? So ES here and then NQ here to be looking for longs at 10 or 10:30. And so what does that framework look like? We have a new 4-hour candle, right? So that's kind of why 10 a.m. works. This one closed nice and outside the range of the previous, so looking for a continuation, we'd look for that out of where? We want to see it respect 0.5 at the previous range. Now going into the 5-minute and looking at the fractal model, which you would want me to explain, we take a look. Do we have a candle 2 closure? We do, as this candle closes inside the previous or above the previous low on both of these. Do we have a change in the state of delivery? We do on both of these. You can see this one's a little bit later. This one's a little bit earlier that occurs. And then you can either look for entries in candle 3. So you can see in candle 3 here, this is where I'd want to be looking for entries if I was to trade that. And so inside of there, what are the ways we can look for entries? Well, we want to see open, high, low, close. So when we see us open and go higher first, not really interested in trying to take a long position here because we just swept out highs. And if we're going to make an open, low, high, close, we're not really making a lower wick, right? We never reach into a point of interest. So I'd want to wait for that point of interest to be reached or hit. And then I can either look for this candle closure in here or wait for that intra-candle change in the state of delivery, which would be here or here. And then I could look to get on side. And then we do have this continuation higher. Now, I'm not a huge fan of the continuation move. Why? Well, I was mainly looking for price to hit this area here. Now that we've already hit that area, I'm not a fan of longing over previous day's highs. Does that make sense, Toby? How do you analyze multiple indices, commodities without missing entries? Well, you're gonna miss entries. The one thing that does help me is my indicator, and I mainly focus on ES and NQ, and then I'll sometimes watch oil and gold as well, but mainly just focusing on ES and NQ because I find that they do enough. But if you're trying to watch 16 different things, you're likely going to miss a lot of things because that's way too much to watch. You could use alerts, but that is quite a bit. If a closure below swing and C2 formation, do you consider this a valid setup? So let me take a screenshot. We'll throw it on my chart and we'll go over it. So this is on the hourly chart. Let's hop into here and take a look. This wouldn't be a sweep. So this is all about bias for me. I'm not looking to trade this because to me, this is just a consolidation and this is inside of a consolidation range. So unless we have some sort of purge of lows or highs, I'm likely staying out of this. I'm not interested in a consolidation inside of a consolidation, right? Something like that. Sure, I could frame this back in. But with this being said, I would say what you need to focus on is not trying to just determine if this is a swing or what it's going to be, but you need a higher time frame bias because that's going to help you out a lot more. If my bias is bearish, do I expect price to come take all these highs, then go back down? Probably not, right? I'd more like to see it just form a swing in there and then fall lower, right? If I'm bullish, then I would want to see these go run out the highs, right? So it's more of a bias thing and a higher time frame framework than just looking at structure, right? So I want to see from the daily chart, since this is an hourly, what my bias is. I don't want to just look for any random candle 2 closure. Here is technically a candle 3 closure, right? So I could look to trade the following higher if my bias was that way. But I don't really look at this necessarily for my model. Let me know if that answers your question. Ayash. Gold has a candle 2 closure on the daily. Can you take a look when you can? Yeah, let me pull it up. Daily. Yeah, so I'd say that's fairly clean. So here's a candle 2 closure. Let's go through it for everyone. We have a candle 2 closure here because price sweeps out the low, right? And you notice it also sweeps out the high. So if you get confused on how this formation is forming, that's why we have to go look to the lower time frames. Do we have a change in the state of delivery supporting bearish structure? No, because we haven't closed through these candles. Do we have a change in the state of delivery supporting bullish structure? We do, as we've closed through this, right? And if we're just taking a look at the higher time frame trend of gold, is it going higher or lower? If we're taking a look, it's going higher. So let me double check. Just making sure my audio and everything was going fine. Once we have that, what we can take a look at is if we are expecting this to trade higher, we can mark out where our T-spot would be, which would be 0.5 of this candle here, right? Our previous range. We can also mark out 0.5 of our opposing candles, right? And we have the overlap of that, which would be from the open of here, open of candle 3, down into there. And then we also have the upper half of this, right? So dragging that this way, this is where I'm looking for that low to ideally form, right? And so we get an open, we sweep out lows into a fair value gap. When do we get our change in the state of delivery? Here. And then from there, we're continuing higher. We get a continuation in candle 4, which once again, we just want to see this area support price higher. So definitely valid. This is a little bit more difficult to try to trade, especially if in New York. I'm just not really trying to trade this. If I was trying to trade this in Asia, I'm most likely just entering, putting my stop on a swing low or a little bit below it. This isn't very ideal. This is about the only thing I would consider, right? Does that answer, or did you have any specific questions on that, Big O? Yeah, it's not a very clean setup, right? So the way you have to go about this is if you're trying to position yourself within it, when we first close here, we'll just work through it. If trading view allows. When we first close there, we have this low protected. And then we don't have another protected low until here. Then now we have this protected low. So if I was an entering, I'd need my stop below there or below 0.5 of that. And then, like I said, this one's not very clean because I don't really consider this an opposing candle, right? Because it doesn't reach into that fair value gap. So it's leaving failure swings. So for me, this is still the low that needs to hold. But if I combine that with 50% of this, I can kind of adjust it into there. Right? Like I shouldn't see price trade back into here. Because at that point, if price trades all the way down into here, is it more likely to go sweep out these lows to the left, right? Think about this. If it trades here, is it more likely to sweep out the lows to the left or just reverse and go trade higher, right? We want those shallow runs to trade higher. So really not super clean. I wouldn't stress if you weren't able to find anything. I wasn't able to find anything entry last night, Asia. I mean, we can take a look at the 4 hour, but yeah, it's also not that clean. It just trades higher. And this is choppy. So, I mean, you could try to trade the 1 hour there. It's like technically valid within the model as it sweeps out a previous low, has a candle 2 closure, right? So I could, if I wanted to trade the hourly, do something like this. Granted, if I'm trading it like this, I'm using half risk or less risk just because I'm more likely to get stopped without a confirmed low. Well, actually, yeah. So I wouldn't stress if you miss something like that. All right, let me see the other questions here. When do you choose candle bodies versus wick for OBSL liquidity range? A lot of times I just like using the bodies unless I anticipate it not to hold the bodies. I don't know. I think that comes more so with experience and what you prefer. These safer stop losses always going to just be the low versus the bodies. One second, I gotta go shut the door. The wind just opened it. But I think that just comes with time, and your personal preference, right? Like, are you gonna be okay? Like, the thing is, going to the bodies will give you more risk to reward, but you can get knocked out of trades that are technically valid, right? So you have to be willing to accept that. Let's see. How's Garrett's course coming along? We're working on the structure right now. It takes time. 30 to 3 minute was clean. Tape Reddit. Good example if you have a candle 3 consolidation, candle 4 will expand. Yeah, so I have taught that in a few lessons. So let's go into it. We'll use ES for that. We'll go take a look. So we take a look at ES here. And take a look back down here. Generally, if this is going to be valid, right, we want to see the next candle expand, which would be candle 3. Candle 3 obviously doesn't expand. It has a consolidation, right? So if candle 3 is not going to expand and this is still going to be valid, I want to see that expansion in the next candle generally. So that's where we start to get it, right? Or in the following. Why would a little question for you, Shinobi. Why would I expect this one to expand in candle 5, not in candle 4, when we're at this point here? I think you should be able to answer this one. Why would I anticipate this to not expand until 11:30? Even though there's a candle 3 consolidation? I can just go over it. So the main thing is just the timing of it, right? Like very simple is if we're going to expand higher, right, we need time to do that. Right here, we're almost all the way through our higher time frame candle and we haven't expanded. Are we going to go all the way up there in like, what is that, 9 minutes? It's very unlikely, right? So it's more likely that this is going to close and then I can wait for the open of the new candle to just actually expand, right? It's kind of that rope analogy, right? And you see how that candle has the time to expand. This can expand all in one candle. All right, let's see if there's a few other questions I'm missing. I did move my stop correctly, or should I have just held? I'm a bit confused on the stop loss placement there. Do you just mean break even? Like, should you have break even to your stop? Because here's the way I see it, is here's the setup. We'll go over it. So first off, nice setup. You have the change in the state of delivery. Looks like you took an entry on the retest of it. I'm a little confused on your initial stop loss placement. Where did you have your stop loss initially? I doubt it was right there. If you did, that's kind of insane. If I had to guess, your stop loss was down here. And then you adjusted it. Initially at the C2. Yeah, so initially your stop loss was something like this, right? Retest there. And then you were looking down there. So here's my thing is, if you're targeting 2R, or in this case like 1.7, maybe your stop loss was there, right? It's, in my opinion, it's fine to trail my stop loss to there, right? I personally don't understand going break even here, because the way I view this is, let's go into this real quick, right? Let's say I'm risking this for this. When I take this trade, I'm risking all of this, right? So let's say that it's $100. I'm risking $100 to make $200, right? Let's say it just would have stopped me out. There, my risk was done, right? Now, as it starts to trade away, you adjust your stop loss, right? And you think you're saving yourself risk. But what's the thing? You still risk $200 to put on the trade, right? So when you go to break even here, right? Now you're giving up this potential gain for nothing, right? So now you've risked, the way, I don't know, everyone has different views on it. The way I view break evens like this, if I'm not going to partial something or get out of my position, is I risked 1R to make 0R, which doesn't make sense to me. I would rather take a loss than miss a winner. So like, I understand if you have your stop loss there, this makes sense to me. Right here, we reach back into a fair value gap, we close over this, right? This is either a secondary entry, or I can have my stop loss here. Why not just leave it there, right? Like, that's a fine spot to trail it to. That can make sense to me, right? I just don't understand moving it to there when the sweep, that's forming a new entry. Unless I'm missing something. It's because of this close through. See, that's hard for me because I consider that just consolidation. Like, I don't really consider this an order block. Order block like that has to be in trending price. Like, it has to be trending. When price is just consolidating, I'm not viewing this as, okay, now we've closed over there. I'm just viewing this as a consolidation range, if that makes sense. Yeah. So the main thing with consolidations is you just think about time, right? Like, look at the difference in expansion there versus this. You just have to practice seeing that. Because like, even this would be a better trail because price is in expansion, right? I'm not trying to trail in a consolidation, because if we identify this as a consolidation, we expect a low to get taken out, right? Or we need a nice, true, strong break out of that for a breakout. Let's see. Yeah, it's just practice. Just practice viewing ranges versus like trending price action. So like, looking back at it, do you see how, okay, we never really went anywhere? And you can also view that in the higher time frame candle versus this, right? Or let's say because you make that decision here, right? Once it closes through, you can just look back and say, are we expanding? No, we're not, right? So honestly, I'm not sure where you are in your journey, but a lot of times when you run into a bunch of problems like this, where you are the reason that you're missing out on winning trades, it's a lot of times better to just set it and forget it. enter here, have my stop loss there, have my take profit, and then I don't touch anything. I either win or lose. Because what happens is you're going to micromanage your way and take away your winning trades. So like here, you should have hit 2R. Instead, you're left with 0R. You risked 1R to make 0R. Right, so now instead of being able to lose 2 times, now you're back to where you didn't even put risk on, essentially. Okay, let me get through another few ones. Hopefully that makes sense. This is 80% of my trades. Great analysis, great execution, shit management. I think you have identified the sole problem in your trading. And luckily for you, it's a very easy fix to just stop messing with things. Just enter your trades and let it do its thing. Like I said, enter your trade, leave your stop loss there, have your take profit, go. Like for an example, is like I took a trade today on some options. I entered the trade. I had my TP set. I went to the beach, right? I got an alert on my phone that I filled out. Cool, right? Like I can't do anything wrong when I'm not watching, right? So if you struggle with management, it's honestly just set and forget it. Because here's the way, how are you going to figure out where you can improve in your trading if you never, like if your management is always messing it up and you can't actually get data? Right? Like if you just look at the data, you'll be like, oh, this was a losing or a break even trade. When in reality, this is a winning trade. You just took yourself out of it. Right? So like make sure to journal that and maybe try that. Like you just have to stop. Most people that go break even like that, let's see if I can bring it back up. Your main problem isn't the management, it's the root cause of the fear of having a position go from positive to stopping you out. You sit there and you watch and you see it go away, you start to get excited, it comes back. Oh no, you get scared that it's going to go stop you out. Guess what? When you enter this trade right here, you risked this amount, right? Most people that deal with this issue, they have no problem with price entering and just stopping them out. They don't mind it, right? That's fine with them. Where they struggle is when price does something like this, stops them out, right? How do you get over that? Just stop watching. Enter, stop loss, take profit, go eat breakfast, go do something, work on something else, set alerts. You come back and you find out if you win or you lose. How are you going to mess up your management if you are not watching? It's kind of hard, right? Once you get that down, then you could work on managing it or adding that. I tell myself every single day, I already took the risk, I'll work on it more. I mean, at some point you just have to ask yourself, like, when is enough enough? You know, I think everyone gets to that point. When am I going to not self-sabotage myself? That's really what it comes down to. I think most people that eventually turn profitable had a situation where they're like, okay, I'm just sick of losing. I'm sick of being the reason I'm not profitable, sick of whatever the problem is. Eventually you just decide that enough is enough and then you change. But it's really just up to you. The hard truth. All right, let's get into some other questions. Could we take a look at Euro USD and GBP USD from the past week together? They've really made me so much money. Do you have anything specific to review? Because I don't watch those pairs necessarily, so I don't know. It wouldn't be much to review besides just hindsight, which, I mean, we can take a look at it. But taking a look, I mean, yeah. I mean, if you use Euro GBP, I think we talked about this last stream where I was saying if we couldn't close below here, right, then I'd want to see up the next day. We reach up in the next day. We can't inverse this, or essentially we're expecting a bearish fair value gap. We close lower. What do we have here? Candle 2 closure with a point of interest. Can trade the following day lower. We close lower. That's a candle 3 closing outside candle 2 for a candle 4 continuation lower, right? We close back inside the range, and here you'd use Euro GBP to see that the pound is stronger. You'd come in here, you'd say, okay, we have a candle 2 closure here, right? With GBP USD. So then I can look to trade this following higher the next day. And then you could also look to trade following higher the next day here into that high. So if that's how you framed it, that's great. That's how I would frame it from the daily chart, which is most important. Let's see. If this was if this was daily, would you consider this swing formation for bias? I don't know what you're talking about if this is daily or what you were talking about. If that's the daily. Oh, are you talking about your example? I mean, yeah, I would just honestly avoid that pair because it's just consolidating on the daily. If we go back to your hour example and say that was the daily, I would just avoid that. And then if that was doing that and you're trading, what is that, euro? Yeah, pound dollar, then I would just look to trade something that is an exotic. So I just look at the futures currencies and I'd pair something that's strong and weak, which honestly is normally the yen paired with something as of the past year or so. Let's see. Would you have looked to take this trade based off the expansion model? I think that's the trade AM took. You can check out his channel. I don't trade the expansion model, so mine would need an hourly swing point or a 30-minute swing point to then try to trade that. So it's slightly different variations there for the open. I'm taking a screenshot so people that are watching the recording can see what I mean. Go to the hour here. Right, so I think AM took this, I'm not sure. Like it's valid within the expansion model because you have 9:30 open, go lower, close over. Right, so that's an ideal formation for me. So this is technically an expansion candle, but it's on the 3-minute or whatever time frame this is. Now with my model, I need a higher time frame closure or a swing point, which we were just grinding up, so we didn't have that. Here we sweep out, and that's when we have the 10 a.m. reversal for the continuation higher. What are the common issues with the indicator to be aware of? There shouldn't really be any main issues. Or if there are, you can report them to me and I'll work on getting them fixed. When we are waiting for a swing to form prior to entry, is it required to sweep a previous low or high in order for it to be valid? When waiting for a swing to form prior to entry. So if you're talking about a point of interest, yeah. So if I'm looking for a swing to form, or in the sake of a candle 2 or a candle 3 closure, right? I'm not looking to just find any random swing point and say, okay, here's a closure, here's a closure, here's a closure, there's one, there's one, there's one, every single one of these closures. I'm not trying to do that. I'm trying to align that with a directional bias, and then I'm looking for it off of a point of interest. It's like, let's say with the SMT on this high, I was looking to frame euro back into the daily open. Like I thought this was going to be a reversal candle. I would have to have this swing here, right? There's the swing, there's the candle closure. Then I would go down to something like the 5-minute. Once we close below here, then I'd want to see 0.5 of this be respected, right? So close below there, see that be respected. Is that respected? It's just chopping, but for the sake of an example, I need to have a point of interest. I'm not just blindly following any swing point. Yeah, so it can be a fair value gap or a sweep of liquidity. What's the C2, please? So if you go through my fractal model course, that's where you'll learn all of that. And it's going to be easier to go through that. It's like 40 minutes of videos than to have me try to explain my whole model in the stream. Okay, I got to those questions. The indicator. So this is just, I think this is actually my admin version which I don't think I'm supposed to show yet, but it's just my my indicator. There are free versions as well, but this is my indicator that's built around my fractal model. Could have been profitable years ago. I think most people can if they just stop doing dumb shit. Excuse my language, but that's really what trading comes down to. I always ask people, you know, how many prop firm accounts or personal accounts have you blown up not going on tilt and not revenge trading? Like there's very few people that blow up accounts if you're not revenge trading, not going on tilt, not oversizing. Like if you don't do dumb shit, like if you're not doing dumb shit, you'll be fine. It's just what happens is people do dumb shit. That's what happens. Like that's really what it comes down to. Yeah. Hands off until 2R. There's obviously some times where it's more discretionary, but for the sake of simplicity, which is what we try to bring to our education, that is what we do. I want to go over finding a true market structure shift on NAS. Had trouble on the 1 hour and 15 at 8. So I don't use market structure shift. I don't know if you've been through either of our courses, but if we go take a look at NQ here, and we'll just go to the 5-minute, or we'll just use the hour for the example. If I'm looking to trade this higher, I'm not looking for a market structure shift. I'm just using these series of down close candles. I think we can use something like a 30. Yeah, 30 is a nice block. I'm looking for the series of down close candles, right, that made the low to get closed through. Once this gets closed through here, that's when I can be bullish, right? Because I'm viewing this as the shift in trend or the change in the state of delivery. But I don't use market structure shift where I'm saying, hey, I need it to break and displace over here with a fair value gap, et cetera, et cetera. I'm just looking for price to do one thing, which is a close through this level, which is very objective. I just joined the call as I had work call. Do we already discuss today's PA on indices? If yes, yeah, we can go over this morning a little bit more in detail. It was a little bit tricky. I think the bias wasn't too hard. It's just the lower time frames were not super kind. Within my model, it wasn't too bad because, like I said, with my model, I need a swing point, right? So if we're going through this, and once we get this change in the state of delivery intraday, right, which is here, I can then start looking long. And I ask myself, okay, where's the most recent swing point? And it's there, right? So the way I think of things in trend is if this is where my swing point is, and I also want to see 0.5 of this be respected, right? It could come and trade lower there. Really, I'd have to trust this one, right? And we have all these failure swings above. So really going into the open, it's like I don't trust these lows to hold, right? Because we don't have a swing point. Like that's how I view it with my model. Right, so going into the open here, when we have all these failure swings, I don't trust those to hold. Like I wouldn't feel comfortable saying, hey, if I enter here, I can put my stop there and I expect it to hold, right? Now, can I say the same thing after that? Yeah, it's different because now we have removed a lot of those failure swings. We have this candle closure, right? If my bias is correct, that's something where I can anticipate this low to hold here to then trade higher, right? And then we start to trade higher. It's a bit choppy, but then we expand through the highs, right? So if you're just using the lower time frames on 9:30, it's valid. You can refer to AMs for that, for the expansion model. Within my model on the 30-minute or the hour, you're having to wait for either post 10 a.m. or you have to wait for 11 a.m. actually here. Because once again, same thing here. Let me actually just hide all these drawings. If we're looking right here, going into the open, which would be right in here, do we have any lows that I just trust to hold? I don't trust that one. I don't trust that one. I can trust that one because that's a swing low, right? And we've closed through that, which I anticipate 50% of that to hold. So let me bring the drawings back on the hourly here once we close through there, right? I then will also want to see 50% of those hold, right? Which you can see is kind of Nice. Comes back and retests it exactly. What's below 50% or an invalidation in there? We have this swing, right? So going into the open, if I was going to try to long this, like I need my stop there, which doesn't really make sense with my target being the highs. So then I have to wait for a new opportunity, which now we sweep out here. Then I can look to trade the following candle using 0.5 of that. So then in this next candle, I know if I want to be long, I have a protected low. I can refine my entry because I'm essentially just trying to find this wick formation on the lower time frame to then trade the body up to these highs. So that's my little review of this morning. I think for a lot of you that are struggling, stop trying to go into the 1 minute, the 3 minute, like super low to figure out why things are happening. Sit out on the hourly. Only go to your lower time frames once you actually have an idea, right? Don't try to build it backwards. Don't say, oh, this looks good on the 3 minute. Do I have a reason? Do it the other way around. Do you ever drop down to the 1 minute time frame after 15-minute confirmation? Almost rarely, never touch the 1 minute. I just find for my way of trading, I am trying to capture the daily range or these higher time frame setups. It's just very rare that I do that. Some people do, and that's great. I just don't like the 1 minute. I took on the 5 minute once we got the C2 closure and looking for trade C3, but it stopped me out. I'm not sure if this is related to bad PA or my stop being placed incorrectly. So yeah, let's talk about it because it should be a pretty easy fix here. I wouldn't say easy fix, but there's a few things we can talk about because it's a bit confusing. So for simplicity's sake, when defining order blocks, the easiest way to do it is focus on stuff that reaches into a fair value gap or sweeps out a low, right? There's very rare times where I'm going to use reaches into opposing candles, and maybe I'll remove that from my course because I have seen it cause some confusion. I just do it sometimes. So here, there's a few things to talk about. Is at the start of a new candle, we want to see us trade lower first, right? So I'd want to see this low, sweep out, close over, go, right? We trade higher first to sweep out this high, right? Open high, low, which is not really what you want to see if we're going to trend it higher, right? But with that, if I'm going to be trying to trade this, I'm generally wanting to see the wick of this time frame's candle form. If you look at the timing of this, you're entering just expecting this to hold when we haven't really formed the wick of this higher time frame candle. So I think here it's more so the logic. I don't fault you for taking this because technically we can just trend higher off of this. It's just the timing of stuff. This is really late into the candle. So if you're entering early into this candle, you'd want to have some sort of wick low to form your idea off of, right? Or let that form. And when we open up right here, I'm not anticipating, I wouldn't trust this low to hold, right? After we sweep that out and then close here, would I expect this wick to hold? Yeah, sure. Right? So one thing here is you said trade in C3, so I know you mean the higher time frame C3. So I think you're good with the timing there. I think what you just need to think is don't think so much in the pattern of this, but think in terms of, hey, has this higher time frame wick formed? Once that wick has formed, then I can just trade it, right? Once you think of that logic, it becomes a lot more simple because you're not trying to trade a pattern. You're saying, okay, has this wick formed? I don't think so, or I don't trust it. Once we sweep out and we trade away, even if we haven't closed over here, you can say, oh, I think the wick has formed, right? Then I can get on side. Hopefully that makes sense. Yeah, exactly. The higher time frame wick. That's really everything. That's all my model is trading open, high, low, close, and you're just letting the wick form. So mainly what I'm trying to do with the intra-candle change in the state of delivery section is that's mechanically letting the wick form, right? So that's the easiest way I could explain how that forms, but it's not always going to form perfectly like that every time. All right. Don't call me out like that, even if it's true. Got it. Point of interest on the higher time frame, then drop down to see if there's a CIST plus. Yes, correct. Having no economic stress is a major part in not blowing in revenge trading. At least it was for me. Yeah, I can agree. Could you show the indicator working on the 15 minute and 1 minute? Sure, we can just go to like the open or something. Let's drop down to, I don't even have it on my chart, so I gotta drop here. We're gonna go here actually. Right. So here's the most recent example. We'll just grab it from here because we're not gonna go cherry pick something. We're just gonna let it show us what we have. And you can see here at 11, we have this little range. We manipulate this side of the range. So we go to the other side of the range. Here we get a little sweep and then closure back in. It's quite the reversal candle, right? But anyways, going into the next candle, I'd want to see 0.5 of this hold. So from the open to 0.5, I'd want to see that hold. In here, it's using this as the change in state of delivery because mechanically it uses the down close candles that made the low. I would use this. So I wouldn't want to see price trade much below there, right? Not very clean. I would not have caught this because once again, I asked myself, do I trust this to be the wick of the higher time frame candle? Personally, no, because I would demand it to reach into here, right? So that's the most recent example here. This is one where if we are going to trade higher, right, I'd want to see this hold, not sweep out that low. I don't know what happens, yeah. This is one where you could actually take a positional entry, if you've heard me talk about that, because we have an invalidation so close to the opening price where you can actually just enter the open, stop on the invalidation or the bodies of it, and then 2R, right? So this continuation is actually more clean than this, and that's just because of how this reversal formed. But that's just the most recent 1 minute example. For options, do you do 45 days or 0 DTE? I don't do either. I mean, I can just show you my trade today. My trade today was, I've been trading Riot a little, so I have some shares in here, and all I did was remove my alerts. But if we take a look at the Riot here, and let's see if all this is a consolidation range, right? Like it's pretty obvious we're consolidating. So all I do is I mark out kind of the low and the high of this range, just that. I don't know what drawing template it has my other one on. But at this, I'm usually just using the bodies, right? And this is kind of a consolidation range. You can use it as a volume profile even. I think I have that here, right? So you could even use volume profile, and you just see when if price is consolidating and expands out of this range, I'm trying to trade it back into the range, right? So my whole thing here is if I can trade the lows back into the middle of the range, I'm good. So all I did was trade this low. If I'm looking back into the middle of this range, what do I have right around the middle of this range? I have this previous high. So with that, I have a long position in here. I'm fine holding the shares. I don't really care to just sell them out here. So all I did was, that was where I had my alert set. I got alerted. Let's pull it up. Right here is where we swept out this low. And if this is a daily candle and I'm expecting it to, go higher, I'd normally want to see open, low, high, close. It's a little different with stocks, but all I see is price trade into this high and we can't break through it, right? So we don't have any momentum through the high. So here is where I sell calls, which is essentially a bet short on my long position, which is hedging my position. And then, so I sold calls in here and then I covered them at 11.16, which was there. So that was my trade there. So that was 50% on the premium. And then now I'm just holding those shares naked. So, and yeah, those were actually, I sold this week's 12.5. So they were actually like at the money when I sold them. because if I'm wrong, I just have to sell my shares at 12.5, right? So if price trades higher, I just have to sell my shares here, and I captured the extra premium, which was like $1,000. If I'm right, these are going to die pretty quickly because it's very close to expiration. You're taking something that has intrinsic value right here to has no intrinsic value. So that's why I chose that expiration and that strike when I could have gone a little higher up. I was more trading it for premium. For someone who does a lot of dumb shit, would it be best to take one trade a day and leave it? Yeah. So if you specifically struggle with tilt and revenge trading, stuff like that, only take one trade. Because the more trades you take, the higher frequency you have, the more opportunity you have to make bad decisions and go on tilt. That's really how it is. Think about it this way is if you could take one trade a day, that's it. How much are you likely to tilt versus scalping and taking like 30 trades a day, you know? What do you do when price closes equal to the open of opposing candles instead of past the opening level? I generally define it as past the opening. So that's a little more discretionary. Kind of depends on both assets. So I'll also compare and just kind of how aggressive my bias is. If I'm very strong biased, I'm just slapping that. If I'm not, I'm most likely holding off. Does your indicator plot out on the 30? Yeah, so it'll adjust time frame. So um, if I want to use the 30-minute and 3-minute, I can just go here. And I'll give you guys a little look. Hopefully I don't get in trouble of we can do custom timeframes eventually. We're adding that in. So let's say I want an hour daily, or I could do 30-minute, 5-minute, hour, 3-minute. Testing that right now. What helps you decipher which trade to take if NQ and ES are setting up similarly? A lot of times it's just relative strength, so what the structure looks like. So for today, I was more bullish on ES than I was NQ. I just viewed it as a little bit stronger, right? Just based off of how the kind of daily was forming and the hourly. So the easiest way for me to see that was going into the open. NQ hadn't taken out these overnight highs while ES had. So I view the strength in ES there because it's showing it's stronger. Plus the equal highs just are more appealing to me on ES. So I just add in various factors. Yeah, exactly. So trade after the wick is formed. That's how does that differ from the T-spot? So the T-spot is where I expect the wick to form. So I'm looking for the wick to form in the T-spot, and then I'm looking to trade after it. That's my whole model, simply put. Murphy's Law here. I take really good trades on my practice and take B setups on my fundeds. I'm going to be totally honest with you. Just only trade one. Stop going back and forth between, oh, I'm going to demo trade this one and, real trade this one, etc. Because if you don't know if you're going to win or lose your next trade, how are you going to know when to take on a demo versus a funded? Like just either take it on your actual account or just don't take it at all and journal it. Stop doing the flippity flop of that. 30 days, one trade a day and see how it goes. Yeah, do that and journal it. That's what I would say. Because the thing is, that actually gives you a chance. Like, I've actually made, I don't know how many, at least a handful of people profitable by solely just doing a 2-hour challenge where they take one trade a day max, 2 hour and nothing else. Because all it does is it stops them from doing dumb stuff and they let the probabilities play out where if they have a 40-50% win rate, they're profitable, right? Most people can get a 40% win rate. It's just they just do so much dumb stuff between all those trades. So, but yeah. We'll get back out here. I don't like the 1 minute. Oops. I took the 715 long after that sweep on NQ today as I was bullish for the day. However, I didn't trust the DPA, and right before market opened, I exited the position at London highs just about 2R. Wondering if that was the right call, if my bias was right. I mean, if you're getting 2R and you're right around the open, I don't think that's a bad idea, right? It's just you have to decide what was your plan going into the trade, and then did you just deviate from it, or did you use new information, or did you just let fear get you out of it, right? Like there's a few different things that go into that. Like that's a sweet trade. You're taking this long, right? And then you got out London highs. I don't know if you took ES or NQ. Let's see. Yeah, NQ. Right, so like that's a sweet trade, essentially. If we're just looking here, you about took this trade, right? Somewhere right in here. Cool. Or maybe a little bit less. I don't know. Somewhere in there. I think that's fine, right? Like I don't have a problem with that, especially if it's like right around 2R and you're going into the open. I don't see a problem with that. It's just if your plan was, hey, I'm holding this trade because I expect this to hold and I'm holding it for these highs, then you deviated from your plan, right? So it's kind of more up to how you manage. I didn't see what I wanted to see before the open, so I exited. I think that's fine. That's your own decision, and you trusted your gut. Like one thing I've found, this is more so with trading options, is like my gut is right a lot. And so I've started to just only trust it and not really care a lot about other things. And it's done me well. What's your thought on trading time? Such as no trades until a certain time or no trades after a certain time? I mean, I think if you focus on like the 8 a.m. to 11 a.m., that's going to be kind of a sweet spot of a window, right? I don't find myself taking almost any trades after 11 a.m., like 11:30. Like I just don't. I will sometimes take trades earlier than that, more so if like right now I'm in South Africa, so I can look. I try not to. But if I just had to choose a little bit of a time, it would be from 8 to 11. That's it. Or even 9 to 11. And if you wanted it more narrowed down, 10 to 11 after that 4-hour candle or after the open prints. What are your thoughts on how long are you typically in a trade? Most of my trades are over by the like noonish normally. Like the thing is, the trades I like are just the New York and the expansion that occurs in it, right? So if you go look, it's normally like 8, 9, 10, 11. We just get an expansion, right? Or a move, right? Like there's sometimes we don't, but 8, 9, 10, 11, expansion and a move, right? And so very rarely am I just holding stuff after that. If it's a true expansion day, which for me, I don't view this as a true expansion day because it has a little bit larger of a wick down here, right? If it was a smaller wick, sure, can hold till the close. But yeah, most of the time it's hour or so max. Like I don't hold trades very long. It just depends what type of trading you're doing. No, 8 to 11. And that also lines up with AM's 7-hour candles because if you're trading 7-hour, that's going to be at 8. How do you determine daily bias? So for me, I'm looking for swing points and closures. So here, I put out a tweet kind of as a troll, but we're just gapping down and trading back into the range. Like if you have noticed, why has price kind of just sucked to trade since, was it August? I think I've actually hated indices since August. Yeah, late August. If you guys know my model was so nice. Essentially from here to the left, right? Like if you look at all these swings that form and then just nice clean moves that form off of them, right? It's just very nice and easy to follow. Versus like here, just grinds up, grinds down, not very clean swings, anything like that. And then if you look at specifically these past 2 months, we're just trading in this range. right? So if we're going to continue to range trade, I'm just viewing anything that's lower as trade it back into the range. Anything that's higher is okay, back into the range or higher. I'm generally more long bias, long term on the indices, just because the indices go up over time, stocks for the long run, essentially. But my daily bias is just focused on swings. So, for example, here we sweep out lows. You can go back in my journal. We would have just swept out that low. It would have been really easy to long that. Once again, very not amazing price action in here. Here is one day where, yes, it can be bearish, but then we gap down our 800, 600 points. Then we close back in, right? So the daily swings hasn't been great. It's just more so about the context and then the closures, right? So if it closes like this, can be bullish. We respect 0.5, close the wick, use 0.5, respect to trade it higher. If we close over this high, can still be trading higher than the next day. What do you think about Euro JPY? I'm in a trade right now. I took a sell. I mean, I don't really comment on people's active positions because I'm not trying to influence what you do. That's your process and your learning. But from looking at the daily, it looks like you, depending on where you entered, cut an expansion day lower based off a small wick. So if we look at the hourly here, which is for me the most important, right? This is something where if I'm considering it, I'm considering this as a positional entry because I have my change in the state delivery here, right? Opens up. If I'm not expecting it to take that high, I can just enter on the open, stop on that high or above the body, right? The only other thing I can consider is I'm wondering if you took a sell in here. And the only reason I would consider that is this is a consolidation. If we're going to continue this trend lower, we have a consolidation. We swoop the high in the consolidation. There's our point of interest. We have a candle 2 closure. From there, I'd go to the 5-minute. And this isn't something I would personally catch because once we get the close through, confirming that high has been made, we're all the way down here, almost at our first target, right? Because if this is our high, this is our first target because it's the low that made the high. And we're closing right next to that. So when I think about terms of taking a trade up here, price could trade all the way back up to here, be valid. And my first target's there. It's not something I'm going to enter, right? So this is just something I'd miss if I was trying to trade it during the New York session, right? Unless I'm going to take something more discretionary. You're in a sell there. Yeah, so like I said, that's valid. I'm just, oh yeah, so you're just taking 5-minute Euro JPY. Oh, you're trying to trade this right here. I mean, I'm not personally a fan, but I also just don't like trading this far away from the daily open, right? I view this as, okay, price already expanded from here all the way down to here. And trying to trade a consolidation is essentially what I'd view this as. Sure, it can expand lower, but it's just not something I'd trade below lows. I took a trade late in the day yesterday for NQ, but it was stopped later in the day. I ended up getting stopped out, but price went to the target after getting stopped out. Would you have taken this trade? I don't. Let me hold up. My filter just went on for nighttime, so everything is bright red instead of colors I can see. So I think you know my model. And so without seeing the higher time frame closures, I don't really know here. But once again, I'm not just entering something based off this SMT, right? Even with SMT, where do I look for my change in the state of delivery? Instead of having to use this, right? I'm just going to use that. We never close below that, right? Right there, we failed to close it below that. Failed to close below that. So I would have to see the higher time frame context to kind of know what's going on there. So I can't really comment. The only other thing I can see is it looks like you have my indicator marked up. I can't tell. we've already hit our max expansion and we hit that target of the previous higher time frame candle. Right, we already came and hit that on the sweep. So it looks something like, right? So if my target's already hit, I'm just not very interested in trading similar to what we just went over. Out of the higher time frame. Sweet, that's much more helpful. Yeah, so to me, there's no confirmation there. Let's go back here. If we take a look at our higher time frame here, right? Sure, I can look to see that, right? Which is, oh, okay. So there's a few other candles that aren't showing, which would be, let me see. Can't see the time. We have another candle up here and then over here, which would be that and this, right? And so this candle here already came and took out this low and then came back into the range and closed as a reversal candle, right? So now we have a candle, not candle 2 closure because it didn't close back inside 1, it doesn't look like. Yeah. But that's a reversal candle going the other direction. Here, you could consider that candle 2 this way, but it's not paired with the confirmation. Here we get another sweep, but once again, once it sweeps out, not paired with a confirmation until we get that in the next candle, but the next candle takes the high, in which case I'd have to let this higher time frame candle close. So according to my model, there's nothing there for me. Yeah. New 4-hour candle opened. I don't know what you mean. Try for what? Could you review my trade from yesterday for his example? Oh, let me put it back on the screen. Is this the 4-hour here? Or where's the 4-hour? That's the 4-hour. The thing is, if that's the 4-hour, we're just kind of making too big of a wick for me to search reversal. And I'm not trying to trade a reversal right next to this high. But maybe that's me being picky. Can you review my trade from yesterday? Can you link it to me? For me streaming, I just can't. Where is it at? If you can link your trade, I'll review it. And then I'll probably hop off soon because I do need to go eat some dinner, go to work on some stuff, and then go to bed. Candle 2 closure. Yeah, but I would have to see how you traded it. Like I would need to see your actual journal, not just review the price, because that's quite a different thing. Yeah, I can look to add in more backtesting here soon. I just have been busy. David, if you can share me a link to your journal with your trade, it'll be a lot easier to review. Because the thing is, I can share stuff as much as I can, but until I go through your view on price and help you adjust it, it's not really that helpful. Like I could say, oh, this is how you're going to do it. And you're like, yeah, I've seen that example 1,000 times. That's all it is. Okay, let's pull this up. Okay. There and here. So I don't know where you traded this. I generally don't like to fade the daily candle, but if you're trading this short just based off this structure, we have that sweep. So we have a valid point of interest. We have a candle 2 closure. Sweet. Do we have our lower time frame change in state of delivery? We do. Here we reach up into a point of interest, right? In the lower half of this candle, right? This higher time frame candle near the open, right? So we have open high. We get the closure, entry here. I personally would have adjusted my target. I don't know if there's something to the left for you to target right there. But I probably would have just taken off here because that seems the most logical and it's over 2R. So that's probably what I would have done to just save me from sitting through here. Or if you want to get really technical, I would have partialed off here, and let's say I left something. When we form a new setup in here, then I could just add until my average price is here, my average price is here, and then take that exit there as well. So then I could get almost 2 trades out of it. But overall, within the model, it's perfectly mechanical, so that's well done. I generally tend to avoid price action like this, where we have a strong move up and then consolidation, because this is where I get chopped up. But you did a good job. Finally, off the 1-minute charts for 2 weeks, no more noise, sick results. Nice. Love to hear it. All right. So we are at about an hour and 10 minutes. If there's any other questions, we'll answer them quickly. Otherwise, I'm going to hop off, and then if there's anything else, you can tag me in chat and I'll get this uploaded to the WAP if you want to review it, or for those of you that missed it. Can you do FX? Yeah, you said that, and I said I would look into doing that when I have some time. T, the indicator can't plot the M30. Yeah, you go to the 3-minute, the 5-minute daily. Okay, hold up. Right here. On the right one. Here we are. If I go to the 3-minute, that's our 30-minute, 3-minute setups. Right? So like right there, the opening one, or the 10 a.m. one. 30-minute, 3-minute. Right there, 30-minute, 3-minute. If you mean 30-minute is the lower time frame, that will be available in a future update. I just don't know what you would pair with it. Yeah, I don't have anything that I pair with the 30-minute like that. Is there any material for scaling up in positions? No, not currently. I'd never look at PM session. I can't tell you the last time I even traded PM session or even watched it for that much. No, I don't trade PM session. All right. I think that's it. Oh, I've never, for what USMT crypto, is it DXY or crypto? So I don't trade crypto, but if I was going to use SMT within crypto, I would use it with the correlating pair. So if it's like Bitcoin, I'd use Ethereum or stuff like that. I don't know anything about that, to be fair. How do I find trading AM session in South Africa? It's essentially the same. It's just at like 4 p.m. instead of in the morning. Honestly, I prefer the morning because the thing is you just get it over with and you have the rest of your day. Here it's like you have the rest of your day, then you work, which is, I don't know, I prefer to work than have the rest of my day. It's just personal preference, but I don't know. I'm going to be in Europe a decent bit this year. The only thing I found challenging is the first time I spent good time in this time zone is I tried to hit both sessions, which is just not good. I was just spending all day on the charts, and I'm like, okay, now what's the point of even having free time if I'm just gonna spend all day on the charts? So then That's why I limit myself to I just don't look at London at all. I just trade it exactly how I would if I was in the States. So. But yeah, I think that is it. We will have how do you market enter on TradingView and price your risk? So all you do is you just use the position sizing tool. I can link a video, but if you use the position sizing tool, it'll tell you what quantity. So then, you know, if you have you just adjust it to your stop loss that you're gonna have, if that makes sense. So it's like if you have your position sizing tool, right? And you're like, oh, I have this stop and I know it's gonna be around there. It's like you can see the quantity would change and you can adjust it from there. You have to make the templates, obviously, or you just do the math. I'm pretty decent at the math now, but you just use the position sizing tool. All right, I'm gonna go ahead and end the stream there. I'll see you guys all next week. Hope you have well, I'll see you in chat whenever, but I'll see you in my stream next week. So I'll end this stream there.